Welcome back, and you're watching a market Fatafat on ET now. Let's move on and get started with more stocks that are buzzing in trade. And on the technicals, now we're joined by Osho Krishan. Osho, very good afternoon to you. And the first stock that you've picked out for us is L&T. This one is expected to report its numbers today. A bit subdued in trade ahead of its numbers, but it's not done anything exciting in the last 1 month as well. So, what are you picking up on the technical levels for L&T now?
Good afternoon, everyone. Well, looking at the technical setup of L&T, well, over a period of time, it has been on the higher highs, higher lows pattern. So that's a very positive setup for L&T. But looking at the recent performance for let's say past 2 weeks, it has corrected from the zone of 3100 towards 2900 odd levels. And previously 2900 zone was substantially it has consolidated in the previous month substantially near 2900 zone. And even it coincides with the 100-day EMA. So, barring that, today is the outcome for the earning season outcome. But overall, if we will be looking at the technical setup, then from here onwards, we can expect that the upsurge can continue. And even though what we are expecting from the outcome, that it should be on the positive front. So from here onwards, again, one can expect the target towards 3050 to 3100 in the near period.
Okay, surely keeping an eye out on L&T over there. Let's move on and talk about Crompton Greaves Consumer Electricals as well as Butterfly Gandhimathi. Both these stocks have been in focus today. Why and what came in as an update overnight is that Crompton and Butterfly Gandhimathi's merger, which was on the cards, is now off the cards. Why? The main reason is called off due to the non-receipt of the requisite approvals that were required from the public shareholders of Butterfly. When you look at it now, 37.15% of the public institutional investors and 96.48% of the public non-institutional investors have voted against the proposal of the merger. Now, what we furthermore understand also is that among the institutions, 4,30,770 shares is voted against the merger. Aditya Birla AMC owns those amount of shares, that's 4,30,770 shares in Butterfly Gandhimathi. So let's keep an eye out on this one. Seems like there's a bit of a subduedness coming in both the stocks post this announcement. But let's move on, and I believe we had NIIT, which reported its numbers as well. And when you look at the numbers that came in from NIIT, seems like a decent set of numbers that the company managed to actually give this time around. When you see the revenues that saw a growth of around 30% on a quarter-on-quarter basis, the company actually reported an EBITDA profit versus a loss of 6.4 crores last quarter in terms of EBITDA. The profits also saw a sharp jump up, 10.6 crores versus 2.2 crores. So good number coming in on that front. Let's bring on board to talk more about the numbers. We're joined by Rajendra Singh Pawar, chairman and co-founder at NIIT Group. Thank you so much, sir, for joining in with us this afternoon. And before we come to number specific, let's just try understanding that IT trends that we are seeing coming in. IT is seeing a weakness. So what is the overall demand outlook that you have right now?
Well, I think you are very right in first commenting that the IT sector is facing challenges, and because of all the reasons that we understand. And we don't see it as a secular problem. It is a problem at this moment, and most of the big companies are holding back, adding people. So that obviously has a direct implication on the demand for services like training. But we have to say that this problem is not, it's been around for a couple of quarters. And we see that the biggest effect happened the last quarter, as you know. But then we can see now that sooner or later people will have to start adding. And then secondly, companies are looking at retraining their employees. So that part is happening in any case. And so we've seen a very decent increase in interest in learning programs, and the 30% increase is a good sign. And we are now looking forward to the remaining part of the year also staying within reasonable zone for the moment.
Does that mean that you expect it to continue for the second half of the year, this weakness that we have seen? And also, if you could comment in terms of the BFSI strength, that one is something that is doing quite well. So what about the longevity in terms of the BFI strength that we've seen as well?
So the banking sector, as you know, is facing a phenomenal growth, not just in retail banking outlet being increased, but also in wealth management, for example. So we see a very steady increase, and we see that being around for a while. It's not a shot in the dark. So we see that, and that's become a significant part. In fact, almost 2/3 is being in IT, but 1/3 of the training that we do is catering to the banking sector. So that's grown well. The IT sector has been challenged. We expect that to start becoming stable. But banking, we expect will continue to grow at the level that it's growing right now. So that's a healthy trend.
Is it fair to assume at an overall level for the year that the organic growth rate would be of around high teens?
Well, not really. I think the last quarter, as you know, there was a sharp drop. And this quarter, we're still a little lower than what we were last year, because last year, the 3 quarters were extremely strong. So this quarter, we are coming closer to the level of last year, but then we have a lot to catch up with. So we are also looking at the second half being more uncertain and that's clear, I think, to everybody. There are far too many uncertainties. So we expect that we should be somewhere around the same level of last year, not very much higher. It doesn't look likely because there is far too much of uncertainty. And the last quarter results of the IT sector also indicated negative hiring, effectively. People left, but they joined, but more people left than joined. So the numbers for the top 8-10 companies of total employees has come down. And that is obviously causing its own set of uncertainties. So people who are looking for adding new skills, who are already in the job, yes, they would need to learn more. So what we are doing really is to really step up the new technology space. So in generative AI, for example, now every one of our programs has components of Gen AI, which is in demand. So it's not about the generic demand going up, it's selective demand, more focused needs emerging for new technology areas. And that's where our thrust is. And that's really what we are looking at, focusing on.
And, if I want to just talk about your margins, they have been fairly volatile as well. So what is the medium-term target that you have over there?
Well, see, the thing is, by and large, as you know, if top line drops unexpectedly like it did last quarter, then the margins get affected very significantly. This quarter, we have covered a lot of ground. And so the margins have got better, as you've seen. So we are anticipating that the next quarter and a half, 2 quarters, the remaining part would be on even keel, but having lost a lot of ground in the last quarter, we would perhaps come to a similar level like last year overall. And margins will improve because we've dealt with a lot of action. We've done a lot of action in the last quarter. Some results have come now. So margins overall for next year will be better. For this year, will be better than last year.
And one more thing that I want to know also is in terms of what are the other new courses lined up and what do you think is going to be the growth driver for the company going forward?
I think we stated this last quarter as well, that for the last year and a half, we've been looking at a diversification across verticals. So if you look at NIIT 40 years ago, we sort of anticipated what was going to happen in IT. And the turn of this century, we started working on banking. So these two are the dominant subjects. But over the last year and a half, we've been looking at emergent areas. And we have a list of areas, and we'll be rolling out programs as we go forward. And therefore, what IT did for us for 20 years and banking has done for the last 15 years, we have a couple of areas on the horizon, which we're looking at, whether it's to do with the whole decarbonization area, whether it's to do with engineering, R&D, whether it's to do with design. So there are areas on new manufacturing. These are the emerging areas. And we have plans to start engaging in those areas as we go forward. And so while IT will remain important and banking will grow, I think that it's the newer areas which will give us more sustainable growth going forward.
areas which will give you better growth going forward as well. Thank you so much, sir, for joining in with us this afternoon, giving us an understanding in terms of numbers as well as the way forward, especially for the company. So that was the management of NIIT for you all on the channel. But let's move on and keep it going with all the stocks that are still buzzing in trade. And next stock, that is RR Kabel. And actually, this one is in focus on the back of numbers as well.
No, Vinny, this stock is actually in focus on the back of a brokerage note that came in from GM Financials. Well, they've gone ahead and initiated coverage in this counter with a buy rating. Not only that, they've also gone ahead and given a target price of almost 1,650 odd crores. Now, what they have highlighted is that RR Kabel is one of the leading consumer electrical players. They are the 5th largest wires and cables player in India with above 7% market share of the branded market. In fact, given some of the the tailwinds that are coming in from the real estate as well as the infrastructure investments, domestic W&C industry is expected to see a CAGR of almost 13% from FY23 to FY27. Not just that, the company is also appearing to be quite well placed in terms of their product portfolio, and they're also scaling up their distribution network. Now, more than other than that, they're also expecting exceptional growth to come in the profitability, and in fact, the growth that the company has posted is the best growth among peers with prudent balance sheet management. So all in all, given all of those factors, we have RR Kabel in focus on the back of a brokerage note that has come in from GM Financials. They've given a big thumbs up, initiated coverage with a buy rating, and that is the reason why the stock is trading in the green as of now.
Right, absolutely keeping an eye out on that one. Not on the back of earnings, yes, keeping on that radar for sure. But Ashesha, PSV Projects is another candidate that is not in focus on the back of numbers. So what's the reason?
Well, yes, order win is why the stock is in focus. The stock, in fact, is at the highest point of the day as we speak, sitting on with gains of 5.5%. So the company said that they are in receipt of orders worth about 200.25 crores. They also said that with these orders, the total order inflow for the current financial year now stands at about 959 odd crores. Apart from this, separately, the company also informed the exchanges that they have emerged as level 1 bidder for the project construction of main building for Gujarat Biotechnology Research Centre in Gandhinagar, and the project cost stands at about 102 odd crores. So one order win and one that the company has been declared as L1 bidder, both positive news flows, and the stock is holding up 5.7% higher in trade as we speak.
Okay, let's move on to the next one from the autos pack, and you picked out Maruti for us, Osho. What's the view on Maruti now? When you look at it, obviously, it's crossed the 10,000 mark, but do you see a further run-up coming in for Maruti? And a sharper uptick is something could we expect from Maruti? Last 6 months, only 19% return when you look at it.
See, being a very large and heavyweight company, it has gained a very decent number in the current financial year. And even as of now also, it is looking very positive on the technical charts. And recently, it has given the quarterly earnings, which was also very much as per the expectation. So from here onwards, looking at the overall view for this company, we are expecting that on immediate basis, it has the potential to retest the zone of 10,800. And once it surpasses the zone of 10,800, then from there onwards, another 400 point of rally can be seen on immediate basis. So on short-term perspective, the counter is looking very aggressive. Currently, it is placed at a very decent support zone. The support lies around 10,300 to 10,200 odd levels. And on the higher levels, 10,800 should be acting as the immediate resistance, followed by 11,200. So overall, the technical structure is looking very positive, and one should definitely keep a strong radar in this counter because it is going to outperform in the recent period.
Keeping an eye out on Maruti. Let's move on and talk about UPL. This one is in focus. Jefferies has come out with a note on UPL. They're maintaining a buyback at the target price to 675 rupees per share from a period target price of 800 rupees per share. What they are saying is, yes, the Q2 numbers, that was something that missed their estimates. Now, sales, EBITDA, that also declined during the quarter on a year-on-year basis, and global channel destocking and elevated pricing pressures, that's something that is a factor maybe that could impact the company. Now, they've cut their FY24 to FY26 EPS estimates by 9 to 10%, but second half they're expecting an improvement coming in over there. Now, North America, Latin America, and Europe enter a major cropping season as well as now. So that is something that they are keeping an eye out on. And elevated inventory levels are something that they are estimating to gradually subsidize with the farm gate demand coming. So yes, that's a key factor to watch out for. As of now, yes, they've cut the target price to 675 rupees per share and they're maintaining their buy rating. That is UPL as of now a bit subdued on trade, down 1/10% to 2/10% in trade. Let's move on, and Osho, the next stock that you're going to talk to us about is from the aviation space, Indigo. And are the charts exciting, and should we expect a sharp up move coming in for Indigo?
See, overall, there has been a kind of reversal pattern that can be seen on the technical daily time frame. Because if we will be seeing the overall trajectory for this counter, then it has seen a very decent correction from the 27,2800 odd zone towards 2300 odd levels. But by the start of the month of October, we have seen a strong reversal, and it is just now has retraced more than 50% of the recent rally. So overall, there is a very decent picture from here onwards for Indigo, and one can expect the immediate swing high, which is near to 2600, should be tested in a very short-term time frame. And once it gets surpassed, then from here onwards, again 2750, 2800 levels will be very much on the cards for Indigo.
Okay, let's move on and talk about Gokuldas Experts. Vamakshi, this one is in focus on the back of numbers, I believe.
Well, yes, a weak set of numbers have come in from Gokuldas Experts, and that is the reason why the stock is actually down and out in trade today, down nearly 5% as we speak. When we talk about the revenues, they did see a dip of almost 12.2%. EBITDA has also come in much lower, actually down almost 28% on year-on-year basis. Not just that, the net profit has actually slipped to almost 48%. The margins, however, have also declined by almost 204 basis points. Now, what the management has to say, well, they do believe that the performance reflects some sort of lean demand that is coming in from major brands, given that they were carrying excess inventory. But nevertheless, the outlook for the second half looks quite promising. They have ramped up the labor force in the second quarter in preparation for the kind of demand that they're expecting to see in the third quarter. As a result, the impact was felt in the second quarter, wherein the expenses saw a bit of an uptick. But they're expecting improved momentum to come in the second half of the year. They're seeing some growing traction as far as the customer orders are concerned. They are making good progress on their Atrico acquisition as well, and their new manufacturing unit in Madhya Pradesh is also on track. So all in all, definitely a weak set of numbers this time around for Gokuldas Exports, but the outlook looks quite promising in the second half of the year.
Okay, outlook looks promising, but as of now, a weak quarter for Gokuldas Exports. But let's move on, talk about IT major TCS. Osho, when you look at it, the mid-cap IT names surely have seen that run-up coming in, whether you look at a KPIT Tech or something like a Persistent Systems, and even in their commentaries coming in from the management is more bullish versus the large IT companies. So TCS, do you think that there's now a different story that could play out on the charts than what we've seen in the last 1 year?
See, undoubtedly, there has been a lackluster move in the large cap IT companies as compared to the mid cap IT companies. But overall structure for TCS looks quite promising in the current financial year, because this is the time that when it has surpasses the zone of 200-day SMA and is being able to sustain above the same. There has been some kind of initial hiccup in the month of April, but afterwards it has maintained the higher highs, higher lows pattern on the daily time frame. And as of now, it is hovering just above the 200-day SMA. So historically seen, this counter has seen a very strong demand zone or support near the 200-day SMA in the current financial year or even in the current calendar year. So overall, from here onwards, one should definitely try to have a very staggered manner of investment in TCS, because over a period of time, we can see a very decent uprun. On the short term, we can expect 3550 to 3600 on an immediate basis, but from there onwards, once it surpasses the zone of 3650, then from there onwards we can expect a very strong V-shaped recovery, and even it has the potential to give another 300 point of rally in the coming future.
Surely keeping an eye out on those numbers over there for TCS. But let's move on and talk about Triveni Engineering, a sugar company. Shesha, on the back of numbers, what are the numbers looking like?
Well, yes, the stock in fact is reacting negatively to the kind of numbers that is reported, 3.2% lower in trade. Revenues for the quarter gone by saw an uptick of 10% on a year-on-year basis. But if you look at the bottom line, profit after tax has seen a big knock this time around. But this was because there was an exceptional gain of about 1400 crores same time last year, and hence profit figure looks on a declining trend on a year-on-year basis. Margins meanwhile have expanded. They've come in at 3.9% versus 3.1% that the company had reported in the previous quarter. As far as segment-wise performance is concerned, sugar and alcohol business. Let's talk about sugar first, where volumes have declined by about 10.6% for the first half of the year on a year-on-year basis, while overall sugarcane crop position continues to remain healthy. As far as their engineering business is concerned, the company says that order booking of 155 crores is what the company saw in the quarter gone by, and outstanding total order book stands at about 1573 crores. But all in all, Street is not excited. The stock is declining 3.5%.
Okay, keeping an eye on that one. But Osho, let's talk about KPIT. I was mentioning that earlier. The numbers were also very good. They've upped their guidance yesterday. So KPIT Tech, obviously, what's the story here now? Because we've already seen a good up move there for the stock.
See, overall, why I have covered both the mid-cap and large-cap IT companies, because both have the potential for a upsurge, but definitely the outperformance can be seen from the mid-cap IT companies in the coming period. Looking at the overall trajectory for KPIT, it is hovering in a very strong pattern of a higher highs, higher lows, and even it is maintaining a substantial up move above the 21 exponential moving average. So technically, it is a very strong setup for any of the counters, and KPIT in recent period, in the last 3 days, have seen a very strong V-shaped recovery that has been backed by robust volumes. So from here onwards, one can definitely expect for short-term and immediate upside target of nearly 1350 to 1400 odd levels. But after that also, we are expecting that it should continue its up run. There will be some kind of in-between blips, but that should be acting as a very strong support zone, and one should try to accumulate it till the trend continues on the higher trend.
Keeping an eye out on KPIT Tech as well. But let's move on to the next one. And Vamakshi, picked up Pidilite as well, and we started seeing that move coming in the stock price. What was the reason behind this?
Well, yes, Vinny, the stock definitely recovered. In fact, the stock is gaining in the trading session today. As you can see on your screens, up almost 6.5%, and that is because we have Goldman Sachs actually upgrading the rating on this counter from sell to buy. Not just that, they've also hiked the target price on this counter to 2,725 rupees per share. Now, largely the rationale behind is that the company has actually significantly underperformed the Indian market since October 2022. The valuations have moderated, and in fact, the valuation is now below the 5-year average, and in fact at the lower end of their discretionary coverage as well. Now, in their view, Pidilite's earnings downgrade cycle is largely now behind them. Growth is expected to accelerate further as new growth drivers emerge. In fact, margins are also expected to see a good recovery, and not just that, enhanced distribution capabilities could be a key enabler for Pidilite. So given all of those factors, we have Goldman Sachs upgrading the stock to a buy rating, also increasing their target price, and that's the reason why we have this counter surging in trade today.
Okay, that is Pidilite for your 30th stock for today, and that was the last stock for today. So thank you so much, Osho Forum, as well as Vamakshi and Ashesha for joining in with us and giving us your views in terms of the stocks on the technicals and the fundamentals. With that, it's a goodbye, and from me, Cheryl, as well as the team who put this show together, don't go anywhere. Closing trades will take the action forward.